listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
Hey, everybody. Welcome back to another episode of the Daily Gold Podcast. Thank you so much for tuning in today. With me is returning guest. He is Robertson, a.k.a. Goldfinger, publisher of energyandgold.com. We had a great interview with him, I want to say a couple months ago. Needed a little bit of time before I brought him back. So, Goldie, there's so much to talk about here. I know there's various things you want to cover, but I'll try and not make this a big picture or a huge picture question. But last time I spoke to you, you were talking about, I think, the low 1900s for gold. It looked like that was the low. If you look at gold by itself, it looks pretty good on the chart. Nice rebound off the 150-day moving average, which is important in my work. You got this really bullish consolidation. It looks like it's pretty close to breaking out. However, then you look at other markets, which we were talking about, small caps, the Dow, industrials, transports, you name it. They're all trending up. They all have bullish charts. The S&P 500 as well. And so I don't know what to make of that. On the one hand, gold by itself looks pretty good, but you're looking at these other markets, they're outperforming gold as they've recovered. So I just want to get your thoughts on what that means at this juncture, if anything.
Hey, Jordan. It's good to be back. It's good to talk to you on a Saturday with markets closed and some calmness in the air. And also, the Washington Huskies look like they're going to have a strong team this year. So that's going to be exciting, although they're never going to be as good as Georgia. But, at least maybe they can crack the top 10 and play in a championship bowl game. So markets. Yeah, obviously we've seen a major rip in the last couple months in the broader stock market. Transports really leading, airlines just crushing it. Financials actually moving into the green for 2023. If we went back to mid-March and somebody said financials are going to be up this year, you would say that you're crazy. You're nuts. I'm shorting financials, and look at what happened, So it's another example of when everybody's screaming fire and everybody's worried about the same thing, and the Fed steps in and dumps $500 billion on the problem. The problem gets solved and the crowd is wrong again, So, yeah, I don't have a lot to add on the broader market. I'm a trader first and foremost. I eat what I kill every day. I'll be long, I'll be short. Doesn't matter to me. I just want to make money. Just want to make a good trade. No real bias. Although I will say, if we zoom out, bigger picture on the stock market, I look at sentiment, look at all the things that I look at. I'm definitely cautious here on the SPY, the QQQ. If I had to express a long bias in equities, it would probably be more in the small caps, the IWM, move down the food chain a little bit. But right now, I would not be surprised if we didn't get a pullback in stocks, even 4%, 5%, just something to reset things a little bit, build that wall of worry. It seems like it's been a little too easy the last month for the bulls. But again, don't have a strong opinion there. As far as gold goes, man, deep down, I am really excited right now. I am really bulled up, but I don't want to jinx it by talking too bullish yet. Okay, so you got to hold me back a little bit here. I zoom out to that monthly gold chart, and I see this setup. I see that line 2090 or 2100, call it what you want, somewhere around there, the big breakout point. And I see all the sentiment out there, all the gold bears, all the gold skeptics, all the people who don't own any gold, who don't care about gold. And then I see this situation that's setting up where the Fed has got to be done here next week. They can't go further. I really don't think that they can hike again past 5.5. I've said that before, but I'm gonna bet on it one more time. I think they're done next week. And then what happens? The market's forward looking, gold is forward looking. What happens 6 months from now? What happens 9 months from now, right? I think we're going to be in an easing cycle that's going to be a pretty lengthy one in come 2024 and probably into 2025. And it's just like that's going to be rocket fuel for gold. So while it may not be the launch point just this moment, I feel like we're really close, Jordan.
Goldie, that's really good to hear because in my mind sometimes I go back and forth, and I mean, here I want to get your thought on this, because if I'm a glass half full guy, I look at, I mean, real interest rates, the real tips yield, or even if you're looking at, CPI, rates minus the CPI, they're in positive territory. They've had this huge move up, the real 10-year yield, real 10-year tips yield, I think is the highest since 2009, 2007, maybe something like that. Stock market's recovering, no recession. Yeah, I mean, you look at all these things, they're not good for gold, and yet gold is not that far away from an epic historical breakout. But on the one hand, I mean, so you could say that if you're glass half full, but if you're a glass half empty guy, you could say, yeah, but we had this 27% bear market in the S&P, real interest rates, all these things, and gold's holding up okay. The weak dollar's helping, but if the market keeps running and the dollar has a big rebound, looks like gold could really get hit. So that to me would be, you have the glass half empty and the glass half full. And the other thing I would add, the other point I would add, not to confuse you on this really unorganized question, but I also think that, and I think we talked about this last time, I mean, if there's some if long-term inflation expectations, I mean, I think they've kind of been rebounding a little bit, and I think there's the threat of that. So even for people who are not super bearish on the economy, like let's say, okay, they don't see a recession in the next 6 or 12 months, but they're really worried, well, the Fed's going to stop and inflation expectations are going to really rise, and then the Fed's going to be in trouble, and that's why I'm buying gold. So I also have that thought. So I don't mean to confuse you, with all these different thoughts, but it's yeah, I mean it's
yeah, it's a lot to chew on.
Yeah, I'm not disputing your your personal thoughts and your personal feeling that you're getting really excited, because I think looking at everything, I also lean to that side, because I think, even though there's some bearish points for gold, I mean, it's still holding up really well. And even if you were to, even if the dollar were to have a big rally here, which I don't think is likely, I still think gold would hold up in the 1800s, which is still, the big picture, still really, really good. So I think just the fact that it's held up so well, it's, to me, it's just a really good sign.
Yeah, I mean, so yeah, again, complicated, multi-part question, but let me just try to express my thoughts as concisely as possible. I think the euro dollar made a major low last year. Look at the monthly chart, zoom that baby out, whatever is 96 cents, it broke through par. That was a climactic bear market low for the euro. That's the key underpinning of my thesis there. Second point would be sure, the dollar can have rallies. It can have 2-week, 3-week rallies, even maybe 2 or 3 month rallies. Sure. It's what markets do. They go up and down. But I'm betting the dollar is in a long-term secular decline. Okay. And if the dollar were to get too strong, like it did last year, I think that would weigh very negatively on the US economy. I don't think the Fed wants the dollar to be too strong. In fact, frankly, I don't think that the Fed minds if the dollar grinds lower gradually, keyword, over time. De-dollarization is real to some extent, although not nearly to the extent that many gold bugs, silver bugs, and anti-American commentators would like it to be. But the reality of the world in 2023 is that things are shifting, things are changing, and many countries are choosing to trade in other currencies when and if possible. So it's just natural transition that like Saudi Arabia is going to be paid for their oil in euros sometimes or in won sometimes, et cetera, right? But the dollar is still king. This is going to be a long-term process. It's not happening overnight, that's for sure. And then, as far as gold, I mean, gold obviously has the central bank bid, which really favors it over, let's say silver or platinum, which don't have any central bank bids to them. And obviously, gold is very, very rare and hard and expensive to extract from the earth. It's not like we're going to find a planet full of gold anytime soon. And then just the fact that the Fed is going to be done here. And I am not concerned about inflation in the slightest. I think inflation was the 2021, 2022 inflation surge episode was a perfect storm. And a lot of gold bugs who have been calling for inflation for the last 30 years or hyperinflation for the last 30 years got lucky with that surge to 9% on the CPI. If you want to call it lucky, because their metal fell during that time. But it's kind of funny how they're right, but then they're wrong on their investment. It was a perfect storm. It was absolute perfect storm. You had everything lined up for inflation to surge during that time. The supply chain issues are all solved. No issues there, and that was a big issue in 2021. We have the Fed tightening over 500 basis points in less than 2 years. That is a huge boot on the neck of inflation, a very powerful, heavy boot on inflation. Okay. Real rates are positive. M2 has cratered. I mean, just simple. The money supply is contracting. You don't get high inflation, when the money supply is contracting and real rates are positive. Okay. So unless the world has completely flipped upside down and math no longer works, inflation is not a problem, and it's not going to be a problem, Jordan. So could inflation be a problem 5 years from now? Sure. But that's after the Fed has re-implemented quantitative easing and cut rates to zero again, which we're not at, right? And if the Fed were to do that, go from 5.5 to zero again, gold's going to double during that rate cutting cycle, maybe even more.
Right. So you see the Fed having to cut rates at some point in the next 12 months. I think you were talking about next year. So do you see a slowdown into a recession at that point?
I think the economy will gradually slow, let's say over the next 6 months, and the jobs market will be rebalanced. So let's say talk year end. Okay, so New Year's Day 2024, I think the jobs market will be completely rebalanced. The unemployment rate will probably be a little bit above 4%, maybe 4.1, 4.2. Inflation, depending upon what you look at, it's going to be 2% or 2.5%. It's going to be in the Fed's range. Okay, they're going to be able to do a victory lap at year end. Okay, on the inflation thing, and they'll just at 5.5 or even 5.25 on the Fed funds, they'll be way too tight, and they're going to cut. I would guess the Fed will cut to 4% by the end of 2024. So I can't guess which meeting it's going to be or exactly what the pace of the cuts will be. But I would guess that if they do hike next week, which seems a certainty at this point, I would guess 150 bips of cuts over the next 17 months from the Fed, most likely starting in Q1 of 2024.
Okay, very good. So okay, okay. So they can start cutting in the next you said Q1, so sometime in the next, what is that, 9 months?
January, February, yeah.
Okay, great. That makes a lot of sense. Okay, now I want to talk about sentiment and junior miners because I know you have some thoughts on that. I mean, to me, I think I'll just simplify it. I've always said you're not going to get a real secular bull market in precious metals until gold has to break out first. And, to me, it's just math. I mean, you look at the gold price. I mean, just think about the last 3 years. You look at the gold price, it's the same as it was 3 years ago, basically, maybe a teeny bit lower at this point. And you look at how much costs have gone up. That's why the miners are so far off their highs. And, the same applies to juniors and their projects. That you could a certain project at, 2000 gold or 1900 gold 3 years ago had really low costs. If that project had really low costs, then today those costs are much higher. They're 30 or 40% higher. So to me, I think that, that explains why just the sentiment on juniors is really terrible. But, I want you to add a lot more color on this as far as, what you see and, what you think could happen.
Well, okay, so let's just start sentiment wise. I've been around a while, Jordan. I've been around a while. It feels like forever, but it's been 20 years. And social media for junior mining has been around, I guess, about 8 years now. And the last couple of years, it's really come into its own, where you can really get a pulse through social media on the junior mining sector and speculators in the sector, and how they're feeling. Um, it's bleak out there, man. Every time I tweet, like even a gold senior chart, so like Newmont or Barrick, I'm tweeting the big guys, like these are S&P 500 companies. Uh, I get negative comments like, "Oh, they had another shitty quarter," "Oh, man, they suck," "Look at that chart, it's awful," just super negativity. I'm just sharing a chart and maybe a chart pattern. I'm not saying I'm in love with the company. I'm not even saying I'm long. I'm just sharing. People have negative comments. And when that happens, it really perks up my spidey senses, because I know on the flip side, August 2020, February 2021, silver squeeze mania. If I posted a silver chart or an AG chart or whatever chart, I would get 100 likes and I would get 6 comments all bullish, right?
And you probably have like 20,000 impressions too. I mean,
Oh,
compare that's the
yeah.
other thing you could look. I noticed that. I mean, I just in the last couple weeks posting something, and I mean, it's barely like 1,000 impressions after the first 24. And I have 10,000, I think 11,000 followers. I know you're pretty close to that.
Yeah.
But if I post a David Hunter meme or some joke like that, it'll get 10 times as many impressions. So I mean that's my comment. But anyway, I'm sorry to interrupt. Please
Yeah,
continue.
no, that's good. And then I also noticed, so for junior mining, very specific beast, junior mining. I'm not talking about senior mining companies that actually pull gold and silver out of the ground and try to make a profit. Junior mining companies that need to raise money constantly and are trying to find something to sell to one of the seniors. Junior mining, there's a lot of junior mining memes now. And all the memes are bearish memes, right? There's no bullish memes. So we go back to January, February 2021, Silver Squeeze Mania, what was it, the Tin Barons, or whatever the hell they call themselves, right? You get
Yeah.
these like cult mania people because they're making money. The stocks are going up, so they make bullish memes to be funny, just like they did with GameStop and all those meme stocks, right? Well, as it turns out, when people are making bullish memes and everybody's patting themselves on the back, it's probably not a time to jump in and participate on the long side, right? So it's the opposite now. Everybody's making bearish memes about junior mining, how awful the sector is, how junior mining CEOs lie or whatever, and the companies are, they're portrayed to look like a 10, but really they're a 1. It's just all negative stuff, right? And I get it. I get it. The junior mining sector definitely let's say has some characters in it and maybe some companies that aren't exactly of the highest quality. Okay, fair enough. But that's what it is. It's a speculative sector. Nobody told you you're buying Walmart or Coca-Cola when you buy a junior mining stock. You're buying a lotto ticket. Like let's be real about it. This is a high risk sector. These companies do not make money. They often don't even have any revenues or any prospect of revenues. So by its nature, it is speculative. It is high risk. And the odds of failure, quote unquote, are high. So that's the reality of it. So if we accept that that is what it is, it's high risk, it's extremely volatile, there's financing risk ever present. Here we are, people that speculate in the sector that should understand what they're speculating in are extremely negative on their own sector. That often comes about when you're at or very close to a market bottom. And that's what I'm seeing recently in the last couple of weeks. And I'll add one more thing about the sentiment. 2020 was a very special year, obviously. And from end of March to mid-August 2020, the junior mining sector had a historic run. And if you participated aggressively, you made huge profits during that run. The main fuel for that run, well, the number one fuel was we had a capitulation crash in early March. And then we had incredibly historically easy monetary policy for the rest of the year, jet fuel or rocket fuel for the rest of the year. 2021 was also a pretty good year for a lot of people in the junior mining sector. And 2022 was an abysmal year. Why? Because the Fed was tightening. The Fed pulled the punch bowl away, and monetary policy went from easy to tight. And that is the exact worst time to be an investor in a speculative corner of the financial market like junior mining, right? So now market is forward looking. So let's assume the market is always looking 6 months ahead. So if the market is looking 6 months ahead, it's looking into Q1 2024. What did I just say is likely to start in Q1 2024? Fed rate cutting. So we are on the cusp of going from super tight monetary policy, financial conditions, positive real interest rates, to gradually easier monetary policy and looser financial conditions. So we are right there, Jordan. Any day now or any week now could be the ignition point for this sector.
Yeah, and what's interesting, well, a couple things. I did a video on this a couple weeks ago, and I noticed, like, if you look at the volume in the CDNX, I know there's pot stocks and some tech stocks in that index, unfortunately, but if you look at the volume, like, it looks a lot like 2002, like the volume. If you throw a moving average on that, it's like at a 20-year low. And so interesting, even though the seniors were off the low, I mean the market had recovered into 2002 by quite a bit. The juniors were still kind of dead at that point. It took a while for them to get going, and I see a similarity because, okay, volume's at a 20-year low, but if you're looking, we already talked about gold being so close to a breakout, but silver's outperforming gold now. It's not like silver's at 21 or 22. It's basically at 24 or 25. So the sentiment is it's reflecting, you would think, like, if gold were at 1700 and silver were at 20. It seems like it's behind. I'm not saying everything's super rosy, but it seems like it's way behind where metals prices actually are, and
exactly.
and miners as well, because GDXJ. I mean, they're way above those bottoms from last year.
Well, okay, so the first thing to understand is the Fed has tightened over 500 basis points in the last year and a half, and financial conditions are tight, and financing is harder to come by. That's the number one fundamental for juniors. And that's what people don't get. Yeah, the junior mining sector is affected by the gold price move, for sure, but more on a bigger picture time frame. Gold bobbing between 1920 and 1990 is not really moving the junior mining sector in any real way. It's the financing environment, which is tough, and it's a higher cost of capital, is what's weighing on these stocks, because higher financing costs, higher cost of capital equals more dilution. That's the simplest way to think about it. And a lot of people don't understand that. Why is my junior not moving up? Your junior's not in production. It's not going to be in production for 6-7 years at best. So you have to understand time value of money matters for the sector and matters for these stocks. Okay.
Sorry to interrupt. That's a fantastic point that we all forget.
Yeah, really important. That's the number. The junior mining sector is not a gold sector. It's a risk on sector. So when the Fed is saying risk off, or we don't want risk on, we want you guys to chill, it's not good for the junior mining sector. Okay. And that's what happened in 2022. That's why 2022 was an abysmal year for junior mining stocks. Okay. Now let's flip back to gold. Really interesting sentiment anecdote for gold. Gold, so what was it, like 2 weeks ago, gold was bouncing off of 1900. I think it was one day it was trading right around 1925. So right around that old 2011 all-time high level. And somebody sent me a private message on Twitter, and then I got an email an hour later. The private message was, when do you think it will be to finally be a good time to own gold? Okay, so that was this guy's question. And then the email was, why do you think gold is such a bad investment? Question. These two totally different people, within an hour, both basically saying, why does gold suck so much? And I'm just like, what? Hold on. Let me double check my quote. 1925. Okay. Where was gold 5 years ago, oh, 1,200. Okay, so we're up more than 50% in 5 years. That's not a bad return for an object that can't walk or talk. It just sits there.
Just a dumb
Uh,
rock.
just a dumb rock that hurts when you drop it on your feet, you know. And then, oh, where was gold 20 years ago? Oh, that's right, it was $300, and today it's 1925. That's a pretty good return for a 20-year time frame. That's probably better than most people's houses, even if you live in Miami. Um, so I just don't get it. I don't get. And you know what? Those questions, number one, they might own a miner that is down for the year, like Core Mining or some other crappy, mining company, right? So their mining stock investment is not doing well, and so that's having their opinion of gold or silver sort of skewed, right? Um, or they're just reading CNBC headlines or they're reading financial news, and financial news loves to focus on negative things. So if gold is down $30 or $20 in a day, it's going to be a headline. Gold gets hammered after Fed tightens or something like that, because that's going to get clicks, right? But it's not reality. The reality is gold is holding up really well and actually displaying relative strength in a positive real rate environment with the most aggressive Fed tightening cycle since the early 1980s. So it's a head scratcher to me, but that just makes me even more bullish, that I'm getting questions like that. What I responded to the tweet was, well, I mean, it depends upon what your objective is as an investor, but I'll just speak for myself. The first gold I bought was in 2003. I bought a little bit of gold, a couple of coins last year when it was 1,700, and I'm happy with my investment. I've made money, and my gold just sits there and doesn't bother me. It's worth more. So I don't see what the problem is.
Yeah, just one more question on sentiment, Goldie. And I don't want to put words in your mouth, but I'm coming across. I mean, maybe this was a bigger thing when up until the last month or so when gold put in that low. But it seems like even a lot of gold bulls are convinced that when there's a recession and the recession is coming pretty soon, gold's going to have this big move down. I mean, it seems like that's almost, I don't want to say it's a religious viewpoint. That's kind of a strong thing to say, but because this happened in 2008, like people are defaulting to that and are thinking that, okay, this has to repeat. So gold's gold's not, it's going to go down, it's going to have a big correction before it goes up. And the one thing that I always say to that is, well, you're forgetting about 2022. Like, didn't we already have the big move down in gold? And so I don't know if that, adds to your view on sentiment or not, but I just wanted to get your thoughts on that.
Yeah, I mean, I think that's right. I mean, people are using a sample size of one or a sample size of two. The two episodes that really stand out in my mind would be that October 2008 drop to 695, followed by the rally back over 1,000 by the end of the year. That definitely stands out. And we know exactly what happened then. You had a worldwide banking system financial crisis, and people were getting margin calls right, left, and center for everything that they had in any portfolio. And gold is something that could be sold and change into currency very quickly to meet margin calls. Period. End of story. And also, that was a very deflationary event at the end of 2008. So, yes, if the world goes into outright deflation, then gold is not great, but I thought we're all worried about inflation. So, we're not worried about deflation right now. And then March 2020, where we had a cardiac arrest and a seizure throughout the world for a few weeks. And that was, again, a situation where there were margin calls on all kinds of things happening, and gold got dumped I think it got dumped from 1,600 to like 1,450 or something in a couple weeks. And then it U-turned back over 2,000 by August because the Fed threw $7 trillion at the scene. So yeah, sample size of 2, sure, it's possible, and a lot of these gold commentators and market commentators, everybody wants to give a forecast. I don't have a forecast, and I don't have a crystal ball for exactly how this is going to play out for gold. And could there be a shakeout, $100 an ounce drop or something? Sure, it's totally possible. You always have to. There is downside risk, always, always. But I just see this setting up really nicely. This is again, I don't want to jinx it, so I want to hold back here. I'm cautiously optimistic on gold.
Yeah, that sounds good. Now, Goldie, as we close here, I want to thank you for coming on. Really appreciate it. My listeners really appreciate it as well. And please tell our listeners where they can go to follow your work, how they can subscribe.
Yeah, so Twitter at CEO Technician, CEO.ca at Goldfinger, and this is a new one, Goldfinger.capital. This is something new I'm launching. It's not a finished product yet, but it's pretty close. Please click the Join Trading Lab button if you want to join, or just subscribe to get my updates. If you join, I think there's a trial offer right now, so you get my morning emails, and you get my best stuff also on YouTube at Goldfinger Capital as well. I put out a video once every week or two. So those are the absolute best places to find me. And yeah, it's been a pleasure, Jordan. Thanks for having me on.
Well, thank you so much for coming on, Goldie. We'll share all those links, and hope you have a great weekend, and hope we can do this again in the coming months.
Sounds great. Cheers.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.